Yeah, so join from that TikTok story. Hello. So today we are looking at the statement of profit or loss. Confirm the countries you're joining from. Countries you're joining from. Once you get on YouTube, just chat. You've arrived there. The stream is on. And we are looking today at the statement of profit or loss. We are looking at the statement of profit or loss. Statement of profit or loss. For the ones who are joining on TikTok, remember we are going live. We are doing the stream on YouTube. We are doing the stream on YouTube. So there's a link on my TikTok stories. Confirm the countries you're joining from. Let me know. Arrange particular sessions like try to do P&L for companies which are listed on stock exchange. That is noted. That is well noted. You'll find mostly there's how profit and loss is prepared for financial institutions, that is the banks. We talk about the banks, we talk about the insurances. They look at the aspect, especially when it comes to the statement of financial position, they're looking at the liquidity, how they arrange it. But the same rules apply. Okay, the same rules apply in terms of the IFRS, what we are required to show, the comparative aspect, that is including the previous records, financial records. You must make sure you have the prior period information there, and the current period for comparativity. Once you join, let me know where you're joining from. Keep liking the live, guys. For the ones who is on YouTube, feel free. I can see you've joined. We're going to start in a few. You're going to start in a few. Let me know you can hear me well. The ones on YouTube. The ones on TikTok. Hi, Lucky Jane, Mama Princess. How are you? For the ones who've joined on YouTube, just chat. Confirm you're here. You can hear me. The ones on TikTok, we are about to start in a few minutes, and today we are looking at the statement of profit or loss. We are looking at the statement of profit or loss. There's a link on my TikTok story. There's a link on my TikTok story that is going to take you directly to the stream. It's going to take you to the stream. Feel free, let me know my sound is okay. Let me know if you can hear me. Say. Nice. Thank you for that confirmation. Hello, Samut, Sam, people on TikTok. Hello. I'm about to start the session on YouTube. So kindly join using the link on my TikTok stories. This is for all members. This is not only for restricted to only subscribers. No, you can join. There's a link on my TikTok story. And today we are looking at the statement of profit or loss. For the ones who are on YouTube, we are starting in a few. Just give me some time. Give me some time so that I make sure everybody is aware. Hi, Paul. Hello, Neptune. So I am using OBS. So you can join using the link on my TikTok stories. Hi, Lucille. Hi, Hushun. I'm waiting for you people to join so that we start. There's a link on my TikTok stories now that is going to take you directly to the live. Go subscribe. Okay, so kindly join from YouTube. Join from YouTube and feel free to chat. Feel free to chat on the YouTube chat, whether you can hear me. Hello. I don't want to leave. Oh, nice. Hi, Jacqueline. Nice to see you here again. Yes. Rwanda, welcome. And for the people on TikTok, we are about to start. I don't want to, I'm in between the session. Someone is struggling to get to where I'm sharing my screen. Hi, Meshuko. We are streaming on YouTube. There's a link on my TikTok story. There's a link on my TikTok stories. There is a link on my TikTok stories. You have joined. Nice, 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 nice. Keep joining, keep joining. Somebody to chat in here on TikTok. The link, I think today we are looking at the statement of profit or loss. For me, I'm not able to maintain the comment on TikTok. Somebody chat the link on TikTok so that greetings from Uganda, feel for real. Okay, you're also on TikTok as well. Then what are we learning today? The statement of profit or loss. I'm not able to get the link. Lucky Journey, Mama Princess, there's a link on my TikTok story. Just click on it. It will take you to YouTube, okay? Directly to the live. Go subscribe as well. You're going to see the live session. Okay, let me know. Hi, Javaya Closet. How are you today? How are you? For the ones who are on YouTube, just give me some time. We're starting in a few. Yes, anybody, Mama Live, Mama Princess, let me know you're able to join. Let me know you're able to join. Good, 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 good. Feel for real, we are starting in a few. The people on TikTok, feel for real, kindly share the link here on TikTok. Share the link on TikTok. Just copy it on my TikTok stories and share it on the comment section on TikTok. Lucky Journey, just follow the link. Feel for real, let me know if you're able to do that for me kindly. Just copy that link for YouTube and paste it here. Kiplimo, there's a link on my TikTok story. TikTok stories. There's a link on my TikTok story. Click on it. It will take you to the YouTube. Hi, 5108. I don't want anybody to get stuck. Let me know once you're able. Mama Princess, let me know once you're able to get to YouTube. We have 1 minute. I don't want to delay people more than we need to start at 8:10. Okay, we are starting exactly at 8:10. Feel for real. Get your calculator, get your pens ready. Today we want to make sure at the end of this session you are able to prepare the statement of profit or loss, and you're also able to read one. Even if you want to look at the statement of profit or loss for an institution, you are able to understand what are these that they are presenting, okay? So let me know who else is struggling to join. Remember, I am streaming on YouTube. There's a link on my TikTok story. There's a link on my TikTok story. There is a link on my TikTok stories. Let me know. Yeah, it is 8:10. So we are going to start. Just join the session on YouTube. We are streaming on YouTube. This is for all members. It's not restricted, okay? So you can join. There's a link on YouTube. And my account is Accounting and Finance Playbook on YouTube, same as here on TikTok. So you can search it or use the link on my TikTok stories or the link on my bio, okay? The unit is a statement of profit or loss. Join Unstoppable G. Make sure you join from YouTube, okay, so that you are able to follow. So with that, the people on YouTube, welcome here. I think we're ready to start. Feel free every time you want, drop a question on the chats. Okay, this is a live session. I'm gonna ask you some questions. Feel free if you have any questions as well, drop them on the chats, and they're going to look at them one at a time. Okay. So as I mentioned, today we are looking at the statement of profit or loss, and at the end of this session, I want you to be able to prepare one. You are able to interpret what is written on that statement as well, okay? So basically what this statement of profit or loss shows, or rather present, it shows the financial performance of a business, okay? By financial performance, we are looking at the numbers. You know, there are many metrics that we can use to measure the performance of a business, but now we are looking at the performance in terms of finances, okay? And this is basically, it's key because this statement is the one that shows us whether a business has made profit or loss, okay? We need to know if a business has made profit or loss, okay? And this, we do that by looking at the income. We take the income or revenue, income and revenue that has been earned by a business during a certain period, okay? And then what do? We less the expenses that have been incurred during that period, okay? And then we are able to know, then as this business made profit, okay? Has it made profit or loss, okay? So that is basically what the statement of profit and or loss does. We are able to look at the income, the expenses that they have and incurred or spent during the period, and then we are able to know whether the business has made profit or loss, okay? You need to understand what do we mean by what is income, what is expenses, what is now where profit comes in, and what is loss, okay? Income is basically what the business earns. If, for example, you are dealing with buying and selling of cups, you buy these cups and then you sell. You see, you've received that amount of money from your customer or client. You've earned that money. That is what we call in income, okay? It could be revenue. Revenue is mostly what is generated, or sales, what is generated from the main operating activity of a business. The main operating activity. Main operating activity. Why am I using the main operating activities? Is because sometimes you might find a business has other things that they are doing. Let's say, for example, not even like having other things they are doing. They could take their income that they are earning or from these sales and put it in an account that is earning interest. You see, they are going to have what we call interest income, okay? They could take this money and buy dividends. And buy equity or rather shares. They buy shares and then they earn dividends from that. You see, that is another income, okay? That is another income that this business might get. But the one that it gets from this main operative, this is what you call sales, or rather we refer to it as basically the revenue. That is, for example, if you're dealing with buying and selling of cups, when you sell those cups, that is what we are calling the main operative business. So basically, income is all the income, including the interest income, all the incomes that this business is able to earn in their, whether in their operating activities, in their finance activities, or in their investing activities, okay? Then we have expenses. Expenses is what business has incurred or spent. You see, for you to facilitate the selling of these laptops that you bought to sell, then you also incurred a cost to buy them. So you incurred this cost, or you spent a certain amount of money to get to buy this laptop to sell. You incurred a cost of your office rent. You incurred a cost of paying salaries to your staff. You incurred a cost of maybe utilities, electricity, all those things. This is what we call to as expenses. Then we go to what happens now for us for a business to get profit. You're going to see income will be greater than expenses. When income is greater than expenses, that is when we get profit. If the expenses are more than the income, then loss. Now the question there, you can chat me. What happens if the income and the expenses are equal? There's a terminology we use on that. Just chat in there, I'll tell you if it is correct. So sometimes the income is the same as the expenses. So it's basically when you less expenses from the income, you get a zero, okay? So that is basically, you can chat what do you call when the income and expenses are the same, okay? So I want to take you now to the process so that we get to the statement of profit or loss. Usually, remember the accounting cycle. You record the transactions as they happen. And then once you record those transactions, you're passing journal entry. You're passing journal entries to record these. So as at the end of a certain period, we get the trial balance. We get the trial balance, which shows the balances in an account at a particular point in time. Okay, so this one is summarizing what is the balance in the this account. For example, if we are looking at the cash account, what is the balance? The balance is let's say 20,000. Okay, that is the trial balance. Then one thing you should note, at the end of a period, an accountant has to do adjustments. They have to do adjustments. We call them period end adjustments. Once we get this period, we do the period end adjustments. Then this is when now after doing the adjustment is when now we prepare the financial statements, and the statement of profit or loss being one of them. Okay, it being one of them. So there's a statement of profit or loss, there's a statement of financial position, there's a statement of cash flows, and there's a statement of changes in equity. There are four main financial statements. Okay, and today we are looking at the statement of profit or loss. So the other thing that I want you to know is there is one critical area when preparing the statement of the statement of profit or loss. You have to do the period end adjustment, so that what you take into that statement of profit, the statement of profit or loss, you know what exactly, which numbers are you taking to that statement. Okay, so I'm going to ask you what are some examples of period end adjustments that we do, considering we are expected to do the accrual accounting. So chat in there, what are the common period end adjustments we do as an accountant before we prepare the statement? Yes, we are there, feel for real. The period end adjustment is you do these period end adjustments so that you are able to take the correct balances to the financial statement. So I'm asking examples of these period end adjustments that someone needs to do, an accountant needs to do before they start preparing these financial statement. That is, for example, when you're starting to prepare the statement of profit or loss. Just chat in there. If you know, give me at least one. I'm going to give you an idea. When you are doing accrual accounting, there's something you're going to see you usually deal with, that is accruals. Accruals, okay. You're going to see there is usually the accrued expenses. What is an accrued expense? 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 Okay. Usually going to see this something else we call prepayments. Let me know, chat in there, you have an idea of the many period end adjustments you do. They're not actually a lot, just some of the ones you know that needs to be done at the end of a period. Good, prepayments. Thank you, Jane. Jane, also the zero-based budget, I assume you were asking about when income and expenses are equal, it creates a break-even point. Okay. Then for prepayments, there's accruals, there is prepayments. Okay. Then there is, yes, expenses not paid. That is accrued expense. You've incurred, but you've not yet paid at the end of the period. So for that period, you've consumed some electricity, but you're yet to pay. That is an example of a accrued expense. From this, we also have prepayments. This is where you're going to see we have deferred. We have deferred revenue. What is deferred revenue? Revenue that you have been paid, but you've not earned. Okay. You've also been paid. Let's say if you get paid revenue before you earn, that is what we call deferred revenue. Okay. When you get paid, when you pay for an expense before you incur it, we call it prepaid expense. Prepaid expense. Good. Bad debt. That is what I wanted. Allowance. Allowance for bad debts. We can do what you can, if you don't have the allowance or rather the provision, we can have there is that adjustment for bad debt, or we can just have the allowance. But as for IFRS, you're supposed to have an allowance or this provision for bad debt. Remember, this is basically the same as allowance for doubtful or bad debts. Okay. Then what else, which is common? Depreciation. Don't forget depreciation. Okay. We have, remember, for when we go to buy when you're looking at capital expenditure, when we are looking at capital expenditure, that is, for example, we go buy a motor vehicle. We don't expense the cost of this motor vehicle. Let's say if this motor vehicle was worth 3 million. We don't go to a statement of profit or loss and expense this 3 million during that period that we bought this motor vehicle. No, what we do is we take this and spreads it over its useful life. You're talking about, if for example, you see this motor vehicle we are going to use for a period of 5 years, then each year we are going to record an expense of 600,000, okay? For example, okay? So you have to expense it over a period. That is what we call depreciation, spreading the usefulness life, the cost of this equipment or motor vehicle, for example, over its useful life. So there is also the depreciation. So you're going to see there is the depreciation expense and there is accumulated depreciation that we usually have that is going to reduce the asset in the statement of financial position. Remember, tomorrow we are going to look at the statement of financial position, and we are going to use the same example that we'll be looking today so that you know how these two, when we do these adjustments, how they affect the statement of profit or loss and the statement of financial position. So these are some of the adjustments. And the best way I want to teach you today is through an example. There's videos I've done for this specific. For each specific, you're going to see a video on deferred revenue, a video on prepaid expenses. Here on YouTube, you're going to see those pre-recorded videos. I've done videos on allowance. I've done videos on depreciation, accrued, each individual. So if you want to get into a deeper understanding of this, you are going to find them here on YouTube. There's also a course for someone who doesn't have the resources to get the course. You can just get even the videos here on YouTube, okay? So I am going to use this example today to create the statement of profit or loss, and which we also use it to prepare the statement of financial position, okay? Just a second. For the ones on TikTok, we are live, or we are streaming on YouTube. We are streaming on YouTube. There's a link on my TikTok story. There is a link on my TikTok stories, and today we are looking at the statement of profit or loss. Okay. There's a link on my TikTok story. There's a link on my TikTok story. Yes, please. That will take you to the live session. Okay. So now we have this question where we are told the following balances were extracted from the books of Upendo Traders as at 31st December 2025. So these are the balances. You can see here we have the premises. That is the balance, the cost that the premise, let's say the building, there's a 180,000. We have furniture. These are basically assets, okay? This is like premise, a building, okay? Then we have inventory as at 31st January 2025. 1st January 2025. This is the opening balance of inventory. So one of the major period adjustments I expected to hear here is something we call cost of sales. Okay, depending if we have perpetual or periodic inventory system. So if you have a periodic inventory system, you have to calculate the cost of sales at the end of the period. But if you use perpetual, you pass the journal entry every time you make a sale. That is, when you reduce your inventory, you make sure you also when you make the sale, you make sure you also record your cost of sale. Okay. Then we have the purchase. That is what has been bought, the inventory that has been bought during the period. The inventory that has been bought during the period, we have 240,000. Okay. Then we have carriage inwards. Carriage inwards is what the cost that you've been cut to carry in. To bring in these items, inventory into the business, okay? It could be inventory. They can specify the carriage inward. Is it for inventory? Is it for other assets like PPE, basically property, plant, and equipment, okay? And then we have salaries and wages. These are basically expenses. Lighting and heating as well, expense. Then we also have general expense. And we have trade receivables. We have the bank balance. Okay, then we have drawings. Drawings is the same as dividends. Okay, drawings is what we use for for sole proprietorship or partnership. Dividends is for companies that are private, basically limited company, okay? So drawings is for sole proprietorship, but it is the same, okay? It is the same as dividends, okay? Then we have capital. This is what capital contributions by the owner of the business. Then we have the sales. This is what the sales is what the business, let's say if you are a business dealing with buying and selling laptops, sales is what you've got from selling those laptops, okay? The main operating activity of the business. That is for 80,000, okay? Remember, this is in millions, shillings. Then we have trade payables. This is what you've not paid. Then we have discount received. There's a video I've done here strictly on discount received and discount allowed on one. I think I've pre-recorded it here on YouTube, okay? So discount received is where you go and buy goods on credit. You go buy goods on credit. When you buy on credit, you are told, the supplier tells you, okay, so if you pay this by next week, I'll give you a discount of 5, let's say, for example, 5%. So you're only going to pay 95% of that amount that they have invoiced you. That is, if you pay if you pay before next week, the end of next week, okay? So this 5% that you earn, this is what we call discount received. When you pay before the end of that, before that week lapses, you are granted this 5%. You call it discount received, because if you could not have paid before then you would have to pay that 100% that you were invoiced. And then on the other end, that supplier in their books, that is what they are going to record as discount allowed. That is what they record as discount allowed. To them, it is an expense. To you is an income. Why? Because to you, you have saved yourself 5% of that amount that you are invoiced. So this is income to you, okay? To them, they, instead of receiving 100%, they have received 90% of what they have invoiced. That is an expense to them that they are ready to incur to motivate you to pay them. Okay, let me know if you understand that. But there are videos I've done here on discounts allowed and discount received, okay? So then we continue to our additional information. For the people on TikTok, remember, I am streaming on YouTube. There is a link on my TikTok story. There is a link on my TikTok story for you to join the live session. Just click on it. The account is Accounting and Finance Playbook on YouTube, okay? So for the additional information, we are told inventory as at 31st December 2025 was valued at 36 million, okay? So as at 31st December 2025, we are saying the goods that are in our warehouse, the inventory for selling, okay? For example, if it was these laptops, we have laptops worth 36 million, okay? And then we have salaries and wages accrued amounting to 6 million. What does this mean? An accrued amount is an amount that has been incurred, but it has not yet been paid. So there are some staff, there's some workers that have worked, but they have not been paid as at 31st December 2025. It is an expense. It has been incurred. Remember, to be incurred is doing your obligated work. If you are an employee, you've done what was obligated of you. So the other person owes you the business owes you the money. Okay, it's just that they have not paid you. So this is already an incurred expense. And when you look it from the angle of the statement of financial position, this is a liability in the business. The business owes the employee. So it is a liability, okay? And it is an accrued expense when you look at the statement of profit or loss, okay? Then we have lighting and heating prepaid amounted to 2 million. What does that mean? A prepaid expense. A prepaid expense, we are talking about when you go, for example, you pay something like today, you pay something today that you're going to use in the next 6 months. As of right now, what you have not used is an asset, because you're not going to incur more money to use it, no? During that period that is ahead, you're just going to use this thing. For example, if it is this lighting and heating, you're not going to incur this 2 million in the foreseeable future till when your subscription ends, for example. Okay, so this is an asset to the business. As of right now, what is remaining is an asset. Let's say, for example, when you paid 10 million. Let's say you paid 10 million for heating and for lighting and heating. Okay, as at 31st December 2025, you spent you have only utilized 8 million. You've only utilized 8 million. Now, after utilizing 8 million, as at that period, what is left is 2 million that you're going to use in the year 2026. This is the expense that you're going to recognize during the period. This is the expense you're going to recognize during the period. This, as at 31st December 2025, is an asset to the business. So when you go to the next year, that is 2026, and the first month you utilize this 1 million. Remember, you're not paying again, you're just utilizing it. So then in your books, you are left with an asset of 1 million. Now this is expense, okay? This is expense. And then you utilize again the rest of the other 1 million. Now you see, you are at the end of the period, you will have recognized the whole 10 million that you paid at the beginning. Let me know if you can understand that. Let me know if you understand the aspect of prepaid. It's very key. Accruals and prepayments, you need to understand them so that when you're making these adjustments, it's just seamless, okay? Let me know if you get that. Then we have depreciation on furniture is provided at 10% per annum, okay? Remember, you have to do that depreciation of that 10%. You see what you're going to expense during that period, okay? Remember, I said you don't take the whole cost and recognize it in one period. Or no, you take the cost of buying that furniture. No, you expense it over the usefulness of this furniture. You say, like, for example, I bought this chair. I'm going to use this chair for the next like 5 years, okay? For the next like 5 years. I can see Jane, you're asking we repeat on the prepaid. That is well noted. Okay, and then another question, but it is 2 million. Why is it? Okay, so feel for real, this is an example I'm saying. So as at 31st December 2025, also Jane, I'm going to repeat this because this question we'll have to look at this lighting and heating. No problem, that is well noted. We are saying initially you went and bought lighting and heating, you paid for 10 million in cash, okay? And then you've utilized only 8 million as at 31st December 2025. So what is left is 2 million, okay? So let's say in January, you utilize only 1 million. What is going to be left? In February, you utilize the other million. It's going to be left 1 million. So as at the end of January, January, you're going to recognize this expense of 1 million. This is still going to remain an asset. So at the end of February, when you utilize this 1 million, remember this is just an example. It's not related in here. This is an example to explain to you so that you don't confuse. This 1 million, the moment you utilize it, that is when now it ceases to be an asset. It becomes an expense, okay? Okay, nice. Good. So for the people on TikTok, remember I am streaming on my YouTube. There is a link on my TikTok story. There's a link on my TikTok stories. Join from there. Go subscribe as well so that when I start the live sessions, you're notified. Okay, there's a link on my TikTok story. There's a link also on my bio. Okay, so we have depreciation as well. For then I'm going to come back on the prepaid when we are looking at this question. Then we also have allowance for credit losses is to be maintained. What has happened? Let me know if you can hear me. Can you hear me? I thought I could see my screen for a minute there. Let me know if you can hear me. Okay, so I'm saying for allowance for credit losses, Coda, is anything with the, no, it's okay. Okay. Let me know if you can hear me. Feel for real, just confirm. I think there is a glitch on the internet. Let me know. Hello, for the people, yeah, just a second. It's rejoining.